There are really two sort of big secrets or secret weapons that I want to share with you that have to do with getting bulletproof books when you're a real estate broker. The first one is actually for any business, no matter what industry you're in. And the second one is specific to real estate brokers. So the first one is actually your balance sheet. That's the secret weapon in terms of how to manage the books and how to make sure that everything's on there and that everything's bulletproof. And I'm going to explain what I mean. So, for example, in the last video, you saw me show you how to start managing the bank feeds, where you're downloading every transaction that cleared your bank account, right? Those transactions are going into the bank accounts. The bank accounts are the first thing you see on the balance sheet. That's the primary way. I think I mentioned that covers probably 85 to 90% of everything that goes through your books, because that much or more of everything that goes through your books goes through your bank account, right? So as we're downloading and coding those transactions, we're uncovering anything that cleared the bank that may not be on the books already. So let's say, for example, your agent closed a listing and you forgot to record it. And now you're downloading your banking, and all of a sudden you see a deposit from a title company. That's going to clue you in. That's why I like that trick I taught you in the last video about just parking that in the commission clearing account so that you can go research that and find out, wait a minute, what is this? Why did we get this money? And then you discover, oh my God, I left a whole listing off the books that we closed. Well, now you're going to have captured income that was left off the books, and you're going to have captured expenses that would have been left off the books in terms of the money you paid to the agent and so on. So that's how you, while managing what's happening on the balance sheet, uncover, pick up, and record things that affect the profit and loss statement. So in other words, managing the balance sheet has a way of managing everything on the profit and loss because of the relationship that everything on the profit and loss has to the balance sheet, right? The profit and loss is all the income you receive, and it's all the expenses that you pay out. All that's going to go through a bank account of yours at some point. Even if you pay cash for something, and that's the only part where it can get tricky, but there's ways to record that. That's for another video on another day. But let me show you on screen with a QuickBooks sample file up exactly what I'm talking about, okay? So here on my screen, I've got a balance sheet, and it's a very simple one. This is the sample file I'm using in the course. So you'll see I have $275,000 sitting in the commissions clearing account. First of all, using the balance sheet as my checklist, right there, that gives away a clue that I've got commissions that I've recorded in here that I haven't fully resolved yet. I haven't paid out everything on them yet, right? Because a clearing account, the reason we call it a clearing account is it has to clear out. It should zero out, right? There should never be a balance sitting in here for any length of time other than, as I've mentioned, if I parked money in here, but again, that's only temporary. That's so I can go research money that came in, for example, and as soon as I figure out what happened, I should record everything that needs to be recorded. So again, this account has to zero out, right? Then we look at the main checking account here that's got $12,000 in it. And of course, the question we're asking as we go through all of these balances on the balance sheet is, does this look right? Is this accurate? Do I really have $12,047.10 in my bank account? Same thing with the trust account. Should the trust account be zero? Maybe it should. Maybe we haven't received any deposits from customers for anything in a while. Maybe everything's been paid out. Maybe not. Again, these are the questions you want to ask as you go through the balance sheet. And that's the secret weapon to getting and keeping a set of books bulletproof, is because if you can verify that everything on this balance sheet is completely accurate, then like I said, everything on the profit and loss has a way of taking care of itself. Of course, you should still review the profit and loss. But if you've done the balance sheet first, when you're reviewing the profit and loss, mainly all you're doing is verifying what we call classification. In other words, is everything put in the right place? Now, the other secret weapon I mentioned is for brokers specifically, and that is in this commissions clearing account. And I'll explain what I mean. So as I said, and as you can see, there's $275,000 in here. So there's two scenarios here. One is the scenario in which you earn the commission. So let's just pick on this one. That you got this whole commission, $150,000 deposited into your bank account from title, and now you're going to go and write the checks, or or pay people however you pay them, to pay the agent, to pay any other expenses or fees that need to get paid out. In that case, it's very simple. At this point in the sale process, when you're recording the commission, instead of putting it in commission clearing, you'll put it straight into your bank account because that's where the money landed, right? So there's going to be a $150,000 deposit in your bank account, you record the sale into your bank account, and then it's easy. Then after that, as you record the expenses, when you pay the agent, you record the expense out of your bank account to pay the agent, and you'll associate that expense with this particular listing, right? And of course, the course teaches you how to do all that. On the other hand, if somebody's paid at the table, this is where the commission clearing is like the secret weapon, because this is where it creates a lot of confusion, especially if you're not an accountant, right? Where you say, okay, so I earned $150,000 in commissions, that's the gross, but that's not what landed in my bank account. We got $150,000. Let's sketch something out real quick here, just so that the numbers are crystal clear. So $150,000 is the gross commission that the broker earned. I'll just call it gross broker commission. The agent gets 20%, or sorry, the agent gets 80%. Okay, I've got this set up for dollars. Let me just fix that real quick. So 0.8 is 80%. So the agent commission in dollars, simple math, right, is $120,000. Net to broker, what you're going to see deposited into your bank account on this listing, assuming there's no other expenses or anything, is $30,000, right? So that's the challenge, is how do I get from the $150,000 that I earned to the mere $30,000 that I received? And the answer is simple. Initially, we parked the whole $150,000 in the clearing account, because this clearing account, I'll go back to the balance sheet, it's not a real bank account. It doesn't represent money you've actually received anywhere. It's just, like I said, a clearing account, so we can park money in there and then resolve it, reconcile it, right? Whatever you want to call it. So now all we have to do to handle this is I'm going to record an expense. And this is why we set the commission clearing account up as a bank account, right? So that we can record expenses out of it. We treat it just like a bank account. It's just a vehicle that we're using in QuickBooks Online to sort of get the job done, right? So I think Dick Grayson was one of our agents, and I don't recall specifically how I set this up as far as if he was the actual agent I said would, that would be on this listing. So it's not that important. I just want you to see how to record this stuff. Obviously, normally you're going to make sure you're paying the right agent, right? So the category is going to be some kind of commissions paid account, right? So we have commissions income. It's not that. We have agent commissions paid, which we classify as cost of goods sold. And in the course, I explain why I like to classify it there. And over here, we'll say the agent is getting how much again? This is why I like to have it all sketched out so I don't lose my place and forget. So the agent's getting 120. Okay, and that was for the Glacier Road listing. So this is how we assign the listing so that this will show up as an expense on that listing. Didn't mean to do that. And it's what we call in accounting job costing. And I don't know why it's giving me that warning. Let's try that again. We call it job costing. Essentially, in simple terms, it means we're assigning the expense to that customer or job. So it falls down out here. This is frankly a little bit of a flaw in QuickBooks Online, but here's what we do so that we can see it all kind of come together. It's because the commission is driven from a sales receipt, and this is an expense. And even though we assign the expense to the customer, when we report on it this way, QuickBooks doesn't group it the way we would hope it would. So there's a couple of ways to deal with that. I'll show you an easy way. We're going to go into the sales receipt. Okay. And actually, we said Diana Prince was the agent on here. And notice we've tagged this transaction with Diana Prince. So that's how we're going to do this. Let's go back down here. Okay. And we'll tag it with Diana. And that means she should be the payee. All right, we'll just set her up as a vendor real quick. Diana Prince as agent. Okay, there's just different ways we can track this. So in the course, I'm showing you different ways so that you can decide which one would work best for you. I'll save this. Okay, and then here I'm going to group it by agents. Okay, so here I have Diana Prince. Okay, and here's the 150 that we earned. Here's the 120 we paid her. Now 30,000 is the amount that's going to land in your bank account. right? That's the part you're going to get. So here's the beauty of it. We've already recorded the income. We've got the 150K. We've recorded the payment that went to the agent. We used a clearing account so that it doesn't affect any of our actual banking because it didn't in the real world, right? But there's now going to be a deposit of $30,000 that lands in our bank account. And here's how we're going to record that. So I'll go into our bank account here, and we're just going to go over here to bank deposit. And the account is going to go against commission clearing. Okay, so it's going into our Wells Fargo account. We're going to take it out of commission clearing. This is going to zero that out. 30,000. Okay, in the receive from, we need the listing. That's how we associate this transaction with the right listing. So in receive from, we're going to go to Glacier Road. Okay, this is going to be Diana Prince. Okay, and save and close. And yes. And now we zero out perfectly. And done. That, my friends, is the big secret on how to handle or how to get bulletproof books for a real estate brokerage. In the next video, in tomorrow's video, you're going to learn how this whole picture really kind of comes together. So the first thing is, go through this. If you have a listing of your own to record, then follow along with what I showed you here. Between the free videos I've got on YouTube and the videos you've seen already, you may have enough to be able to put this all together. So try it. And then, of course, as we get into this, and certainly if not sooner, by the time you get into the course, you'll definitely be able to learn step by step how to put the whole listing together, all the income, all the expenses, everything that you need to know about how to do the accounting for all of your listing.